We're going to kick off with a great panel session now. Angela Yore, founder of Sky Parlour, is taking this session. So Angela, the floor is yours with your panellists.
Good afternoon, everybody. How are you? I hope you're all well. Just get my computer here. So our panel is a thought leader's crystal ball view. So what does the future of digital financial services hold? You're going to hear from our industry leaders here. And also look at our predictions. We've got 6 predictions. You may have others. We'd love to know what they are. But we've got 6 really good predictions that we want to talk about. But to set the scene about the changes in the sector since 2008, I'm guessing everyone here remembers the car crash of 2008. Well, my son James was 3 in 2008. And between the ages of about 3 and 10, his parents and his grandparents and all his family were still sending him checks in the post or cash in the post for his birthday. And we were sending little envelopes into school with money in, chinking away in the back of his pocket. And it seems that innovation, even though it was the start of this generation, we've got to change the banking system, we've got to get some more competition in this sector, it was still pretty basic. It hadn't changed since I was 16 that much. And then one day he took £400 in his pocket to school, and I got a phone call from a teacher saying, "Why has James got £400 in his pocket?" And it was because I'd got the cash out to pay a builder. And I said, "James, don't touch that money, keep it safe." So he put it in his pocket and took it to school. And then when he was about 11, we started seeing, this is 2017, we started seeing the innovation in payments and in banking come through. And he was a big lad, he had his school uniform on, going up to the big school, and he was using his finger, using parent pay, as he went through to the canteen. We would upload the prepaid accounts, and he'd use his fingerprint to pay for his lunch. And also, I could see that he was eating lots of Oreos and no sandwiches at lunch as well. And then we got him this Go Henry account. So then we started to see these different types of wallets with jam jars so that he could manage finance. And we started talking to him about finance. This is all he knew. This is all he knows as a Generation Z. And then in 2019, a client asked me, "Do you know what your kids, what they're using what they're using to pay?" So I went out to my friends, and 35 of them came back. Yes, I have 35 friends. Came back and said, "Actually, we're all using traditional mainstream bank accounts." There was only 3 at that point using challenger bank accounts. But then in recent years, I've noticed that with some of the features that you see with Starling and others, offering secondary account holders on a card, that people who have housekeepers and nannies are starting to use some of the really good features that are on these the challenger bank accounts. Anyway, now we've just been through COVID. We're still in COVID to a degree. And he now has, he's 16, he now has access to a Hargreaves Lansdowne account. He has access to a Coinbase account, and he also has Santander Online. And just before I came on this panel, he actually said, "Mum, can you put 25 quid in my account? I'm hungry." So I guess the point of this is that the investment in this sector has driven up the innovation, and the innovation is being adopted by consumers. We're starting to see that open banking and some of these PSD2 and these other initiatives have started working. And by the end of 2022, the global fintech industry's revenue is estimated to be 159 billion, and that will continue to grow, double-digit growth, throughout this decade. And these people on the panel that I have today are driving this innovation through the banks, through their fintechs, through their fraud prevention businesses. And I'd just like to sort of now introduce you to my panel, starting with Jessica Richards here, who's Head of Market Development for Payments at NatWest. Tell us a little bit about NatWest.
Thank you. Yes, Jessica Richards, Head of Market Development for NatWest, where I cover payment strategy and regulatory, industry, and external engagement. Many of you know NatWest, I'm sure. We are a scale provider of payments in the UK. We process 1 in 4 payments in the UK. And payments really sit at the heart of every customer relationship. And we do have quite a lot of customers. We have 19 million customers, 17 million retail customers. We're the #1 corporate bank, and we have 750 government agencies that we bank. And as a payments geek, I am delighted that we process payments for every single one of them.
Fantastic. I didn't know all that, so thank you for that. Tom, hello.
Hello. Yeah, nice to meet everyone. So Tom Pope, Head of Payments at Tink. Tink is an open banking platform. Sadly, we are not quite as large as NatWest. We do work with NatWest, but a tiny proportion, I imagine, of your 90 million customers. But we are an open banking connectivity provider, so we work with 3,500 banks across Europe. We do account information services and payment initiation services, so we can retrieve information about users' accounts and we can initiate payments. We package those products up in lots of different ways. One of them we use with NatWest, for example. If you use the NatWest app, then it's sort of Tink's product that powers the insights around how you're spending and links your bank accounts, for example. But I work on the payment side of Tink, particularly excited about the future of payments and how open banking payments is starting to become more and more mainstream and take over Europe.
Lovely. Rob? Hello, Rob.
Hi. Rob Eleveld. I'm the CEO of Akata. Akata is a MasterCard company. We were acquired just under a year ago. We sit inside MasterCard Identity Solutions with 3D Secure EMV for authentication and another acquired business called NuData. And we basically provide fraud prevention to issuers, acquirers, and merchants. Our specialty is PII data that it looks fraudulent or it looks real, name combined with some combination of mobile phone, email address, IP, and physical address. And our sister company, NuData, does the same with device identification and behavioral biometrics around a device, how people are typing if we've seen this mobile phone number before. So it's very complementary. Happy to be here.
Thank you. Cecil?
Hi, Cecil Edwards. I'm Chief Operating Officer for GPS. We are a processor. We've worked with a number of fintechs to help scale their business. We process pretty much all over the world at the moment. You may or may not have seen some recent news of us. We've basically secured a quite sizable investment recently, and we are in the process of significantly globalizing the business. So, so where we are today is really trying to push out from the UK and be more global. But this topic around crystal balls is something that we're clearly very interested in at the moment. So.
And last but not least, Robert, not to be confused with Rob in the middle there.
Indeed. Good afternoon, everybody. I'm Robert White. I'm Head of Payment Services at Santander. A bit like Jessica, we're a bank. We don't quite process 1 in 4. We're about 1 in 10 payments in the UK, about 15 million customers. We do have quite a big global footprint, so we're obviously big in Europe, and we're also quite big in Latin America and North America. I'm a payment geek as well, I think. I think that's the label now that I have to put on myself. I've been around in payments for quite some time, so I've seen faster payments come along. More recently, I've been involved in open banking and working with organisations like Tink and others to start building up the excitement that is open banking.
Okay, let's get into the conversation then. So we've spoken on a couple of occasions now, and we've come up with our predictions. But before we go into them, Jessica, would you give us a little bit of a sort of state of the nation?
I'm happy to kick off. So I think there's general agreement amongst us that the payments landscape is changing rapidly. And this is driven by a number of factors. So customers are starting to expect real-time, 24/7 digital payments with enhanced data running alongside. Regulators are driving innovation and competition, and at the same time trying to protect customers and ensure security and resilience in the systems. And technology. Big tech, fintech are entering the market, and technology has given us a host of new solutions. So APIs, open banking, cloud, digital ledger technology, as well as request-to-pay, QR codes. The list goes on. But what does that actually mean for the industry? And again, I think we all agree that payments is a network industry, and therefore the industry, and with regulators, need to agree years in advance what the central infrastructure will look like. Although I do think, Robert, that you don't quite agree with me on the next statement, that we actually have a pretty clear view about what's coming up over the next 12 to 24 months. And I see the fact that we know that there will be huge investment in infrastructure. We know, particularly around ISO 20022, with RTGS, with Target 2, NPA. We also know that there will be a focus on open banking, and the industry, again with regulators, will have to come up with the governance structure for open finance. We know that there will be a focus on protecting the customer. Not only the industry, but regulators are very focused on this, with the PSR looking at consumer protections over faster payments and looking at APP scams, amongst others. Even longer term, Bank of England have stated that they're going to launch a CBDC in the second half of this decade, and central banks around the world are looking at cross-border payments and how to make them easier and simpler. I think the harder question, though, is, so what does this actually mean for customers? And I was thinking about this from a NatWest customer perspective. You know, what will be different for them? And I think ultimately they will have simpler, smarter, safer payments. And just to try and bring that to life, a few brief examples. So the first thing I was thinking is, there is this huge infrastructure renewal in the central space, but we're using that to re-architecture our own internal systems, using API, using cloud to make them modern and flexible. And what that will mean is that the customers will get solutions to their pain points much faster. I think we also see a lot of potential in open banking. And we've been first to market on a number of solutions. And that will mean customers see more innovative solutions. And the final thing I would say is that with this global situation that we're in, with the crises around the world, combined with the future of money and the digital money, actually customers will need help managing their money. And the data and insights that we're all looking at will help, we will be able to help customers thrive financially. So that's a sort of state of the nation, but I know, Robert, you had a few thoughts, particularly on the infrastructure piece and how we can actually get that done.
Yeah, I agree with, I think, everything you said. I think at the heart of all of the decisions that we've got coming up though, are the customer and how we look after the customer. I think we've learned over the recent while that faster payments is fantastic. It's world leading still in many cases, but that consumer protection element's missing. So we need to learn from the past, and we need to make sure that we keep pace. I've been involved in open banking payments for quite a while now, and I think the opportunity there is really fascinating. It's really exciting, and the variants that we can deliver from it, I think, are going to bring a lot of value, give customers choice. But the infrastructure piece, and I think where I slightly disagree with Jessica, is yes, we all know that ISO 20022 is coming in. Yes, we need to change infrastructure, and yes, we need to do things. But I think there's a dynamic that we need to work through in terms of what do we need to change, and when do we need to change, and how are we going to change, and where is this overlap, and bringing in new things like open banking payments, variable recurring payments. I'm sure will come up in the discussion in a minute, but there needs to be a sequence and an order to make sure that we do everything properly, but do everything in a controlled way, delivering the best value for the customers. And I think that's where I feel slightly different in terms of that. We know what we're doing, absolutely, but we're at an altitude that probably isn't in the depths. So I think that's where I am.
We need the
moment,
detail.
Well,
the opportunity.
I was going to say, it's not a payments punch-up, but I'm glad to have some disagreement on our panel. So anyway, let's go into our first prediction. So over to you for this one, Tom. VRP will be the TFL moment for open banking. Discuss.
Yeah. I mean, first of all, just to define the acronym, well, two acronyms, right? I think TfL, everyone knows, Transport for London. I think that's referring to the contactless adoption by TfL. And then VRP, Variable Recurring Payments. So for those less familiar with the open banking kind of terminology, where we're at today, we have a really fantastic, actually, product for one-time payments in open banking. And actually, recurring payments, if it's the same value on the same dates every month, that also works really well. So we have that. That as an industry is kind of something that we didn't have 2 years ago. We're seeing pretty explosive growth in adoption of that for use cases like paying invoices, topping up accounts, and things like that. But it's often said VRP is the next wave, because VRP is going to enable that kind of bank-on-file type experience that you get when you pay with a credit card and you save it with a retailer. I think Rob and I actually agree. We were discussing just that. I think we agree. I think VRP is potentially transformative as a piece of technology. My view is that we shouldn't get too carried away, right? We shouldn't be like the crypto industry. We shouldn't invent solutions to problems and then try and find what the problem is. I think with VRP as it stands, there's a long way to go in terms of solving things like consumer protection, how a dispute's going to work. That's really important, right? Payments is not something you just do and hope for the best. If you screw up payments, then consumers are going to get hurt, and the banks are going to get pretty cross with the fintechs, and the whole ecosystem is going to fall to pieces. So it's important we get it right, but the prize is enormous, right? And I think if we can offer that VRP experience, the user experience benefits for consumers in terms of streamlining the payment process, the cost benefits for merchants are going to be significant. It could be really exciting. So I won't say in the next 12 months, but maybe in the next sort of 2, 3, 4 years. I think that's a big theme.
Anyone else like to come in?
Do you actually agree with me on that?
I do agree with you. I won't be argumentative with you. I think VRP is, as you say, in its early infancy, but the opportunities will build, and quite quickly. There are steps that we need to take. I think the CMA came out with their statement last week around the definition. It's helpful in terms of it's given everybody a clear indication of what they see as today's need and what they see as an evolution forming from it. So I think working with Tink and TrueLayer and others, there'll be a great opportunity to start working through what looks good, what's going to be great for the customer. But it's always back to that point around making sure that we look after the customer and helping them, giving them the right choice, helping them move seamlessly. The phone is in everybody's hands. I've got 11-year-old boys who, if I see them without the phone, I worry that they've lost it. So it's just an evolution that's going to happen. The fingerprint will move money, yes, absolutely, but it needs to move it in a safe, secure way.
Yeah, and coming back to what Jessica said, right, I mean, we've got to think about the user experience, and open banking can really transform some really bad payment experiences today. If you're topping up a wallet, if you're topping up a neobank account and you're using a card to do so, that's kind of fine, but it's a bit expensive, a bit clunky. If you're doing a bank transfer to top up your neobank, that's a really painful experience. You're leaving the bank's app, you're going to a different bank, you're getting the reference number, the sort code right. It's painful. High dropouts. And I think with open banking, we can make that vastly streamlined and much better. And so, kind of unsurprising, that's where we're seeing quite explosive growth. I think kind of VRP needs to be a bit further along the line before we really know exactly what problem that's going to solve.
Okay, thank you. So it's not quite the self-driving car yet, but getting there. So everyone wants to protect the customer. Another one of our predictions. That one's for you, Rob.
Well, we're seeing two things going on with protecting the customer right now, I think, in this year that will carry on. If you think about sort of a customer journey as with either a financial institution or a merchant as sort of some sort of account sign up, some sort of multiple logins to that account, and then at various times along the way, transactions. And the first thing that's happening is PSD2 is really here, and strong customer authentication is really here. I was talking about that in 2018, 2019. It's actually here now. And it's working. It's actually driving down fraud rates at the point of transaction. Unfortunately, that doesn't mean that fraudsters have decided to take up legitimate jobs. What they've done instead is moved earlier in the cycle. So they're inserting fake identities, lighter weight synthetic identities, et cetera, at account login or account takeover. So I've been at Akata for about 8 years, and early on, merchants specifically used to focus, and acquirers used to focus on just protecting the transaction. In other words, you could sign up for an account really easily at any merchant, and they didn't care. Just as soon as you tried to transact with a credit card, they wanted to protect that. Well, now they're much more needing to be careful about a customer identity verification process all the way through, including the transaction, because fraudsters are inserting earlier. On the other end of the spectrum, what's happening right now, due to the war in the Ukraine and the sanctions, is there is going to be an immense amount of state-sponsored effort to get past KYC checks in Russia, to get around sanctions. And KYC checks were put in place, really after 9/11 to prevent ISIS and other of those types of entities of creating bank accounts and moving money. There will be 100 times, maybe 1,000 times more computation power and skill going into working around KYC by the Russians than anything ISIS could have produced in the last 20 years. Very sophisticated. So a few years ago, KYC would have primarily been kind of a checkbox. Hey, I checked someone's national insurance number, or in my case, social security number. I checked their date of birth. It matches. We checked the box for the regulator on KYC. All of that data is available on the dark web. It's extremely easy to get around. And there is going to be immense amount of money at stake for state-sponsored criminals to get through those types of checks. They're going to need to be much more sophisticated. That will shift more towards machine learning, away from sort of deterministic checks of whether this matches that, much more towards machine learning models with many more inputs to decide if this is a real person or a fraudster early on in the process. So those are the two things we're seeing, and what that means is that fraud and identity verification in the customer needs to be protected from the very first touch on a new opening of an account all the way through all the transactions. That's what we see.
Tom? So talk to us a little bit about regulation in this area with customer protection.
Regulation and customer protection. I'm not sure I've got anything particularly interesting to say about that.
Has anyone else got anything to add on that point? Okay, well, let's move on then to creativity will win the war for talent. This is something that GPS has done a lot on. You've got a great deal to say. We know as an industry that talent, good talent, we need to bring talent in from other sectors. We need to educate the people that we're bringing in. It's a burgeoning sector and an exciting sector, but at school, kids do not know what financial technology is. So it's not a career option at the minute. So tell us a little bit about what you're doing.
So I think I want to just take a step back for a second. So this industry is not going to work unless we have the right talent in it. So the thing everybody's got to kind of realize on day one, which is where we've come from as a fintech community, is very small. We're growing out. But if we want to take advantage of the opportunity, we need more people in the industry. So today, as I sit here right now, yes, we're growing. Since I've been in GPS, I've grown my team by 40 people. But actually finding where those 40 people are coming from and then going into the market to go and get them, prices are going up, right? All of you today are probably recruiting. We've all come out of COVID, the right side of it, thank God for some of us. And that's meant the market is really, really hot. When the market being really, really hot, you're just paying the prices, so 20, 30%, people doing a go-round. But what's the problem here? Yeah, not enough talent. So there's not enough talent to capitalize on the opportunity. So we need more people in our industry. That's how our industry is going to succeed. So that's the real big question we've all got to wrestle with. Yes, you've got to be successful, attract customers, but you also need to be able to execute. Where is your execution capability going to come from? You can keep going and nicking off the other guy or the other girl next to you, but that go-round's only going to go so far. So one of the challenges that we're looking at GPS is how we bring people into the industry, right? So how do you get good marketeers, good lawyers, good accountants who don't know anything about this industry, but to attract them to us, right? How do you bring people in, and how do you get them to swap their industry and take this career seriously? So if you look at the work that's done with the Khalifa Review, there's a huge opportunity for the UK in terms of fintech, right? But how are we going to execute? if we keep talking to ourselves, it's not going to happen. So we've got to find different pathways to get people into the industry, right? So, and that's at all levels, right? We need talent at all levels, and we need talent from all type of backgrounds as well. So, if you think about, I'll take myself as an example, I come from what would probably be a non-traditional fintech background, but the point is it's about talent. It's about that ability to execute. So where do we find those people? So GPS, we're doing things up and down through the scale. So starting off with effectively apprentices and working our way up to experienced hires that we're trying to bring in from outside the industry. I am not personally a payments guy. I'm a retail banker. So that might be certain heresy to this crowd, but having come from retail banking, I understand the importance of that ability to deliver for customers. And we are bringing in people who have a customer service mindset. They're not traditional payments people. But by bringing that customer service mindset and putting the customer at the heart of what you're doing, gives you the ability to really execute. So the challenge for all of us, in order to grow this industry, is not to steal from the guy next to you, but bring new talent in, right? Because you're just going to have the same ideas going round and round and round in circles. We need to find talent in order for us to be able to scale and for us to be able to execute on the opportunities out there. The opportunities are huge, right? And that's the challenge for every executive today, which is, where am I going to find the people to help me deliver the outcomes? Because based on those outcomes, I'll achieve my business.
I'm going to stay with you, Cecil, and ask you, I think we're on our fourth prediction now, which is 2022 is the year for being 2022 ready.
I'll take that one. You can go if you want.
I think we modelled our
Like I was going to say, this is supposed to be a common language.
Like I said, non-cards guy.
We started with this could be the easy joke of 2022 moving to 2022, but whether we deliver stuff this year, we'll see. It's back to the point before around infrastructure, and we've got a seismic change coming in terms of the way the industry's looking to do payments in the future. But one of the things that we've noticed over the years is that there are lots of different payment message standards, and so ISO 20022 is looking at creating that common message standard. Doesn't mean everything has to be the same, it just means it's in such a similar format that interoperability and the exchange of data becomes easier. To Cecil's point before, one of the things that people are waking up to from a payments point of view is payments is just a bit of data that moves around. And actually, within my team and within many banks now, data scientists, data engineers are becoming equally important in terms of the way that we're developing and evolving over time. As we go through the infrastructure change, looking at ISO 20022 as the way forward is going to give us a huge amount of range and opportunity to scale. And it's not just about looking at how we move a SWIFT payment internationally with a lot more information in it, but local payments, domestic payments, including invoices, or a lot more data than the 18 characters that you can get in, is part of that evolution. Again, it goes back to the governance and making sure that the right standards are introduced. So UK Finance and the Bank of England and Pay.UK have been working together on creating common standards. Open banking is coming along into that foray as well, looking at how it can start developing up. And I think over time, we'll start to see the industry bringing itself together and actually working together in a lot more of a streamlined approach to make sure that we have the right information in the messages to help the banks and the fintechs and all the parties in there moving the transactions around. To the identity point before, absolutely. Fin crime's difficult today. It's even more difficult at the moment for obvious reasons. And the more data we can embed in a common structure, getting the data right in the right place, I think is going to be one of those key evolutions that we can see and bring forward.
Thank you.
Can I just come in on 2 points you made? One of them's the infrastructure piece, and the second one's how you cooperate and also compete. So the first one around infrastructure, I think someone mentioned earlier, there's a huge infrastructure renewal going on. People are moving from traditional data centers into the cloud. So the challenge for everybody here, especially for the bigger banks and some of the slightly older organizations is, if you're not cloud native, where are you going to get those people who understand how to actually work on the cloud? So, if you're one of the larger organizations out there, and there are two on the panel, you may have a challenge with renewing your infrastructure. So where are you going to get, and I know we're going to come back to my talent point here, but where are you going to find those people who are going to support it? Yeah? I come from HSBC, and back in the day it was green screens and Cobalt and all the rest of it. So as you try to take that infrastructure and you try to renew it, how? Who? How many people here have AWS native individuals in their organizations? Yeah? Great. How many don't? How many don't? No, seriously, tell the truth, right? Loads of us, right? So the real problem is it's new technology, but it's new experiences. So how's a regulator going to work with it? How's that infrastructure going to really support? What happens if AWS goes down? And all of this is about trust, because a consumer needs to be able to trust us with their money and trust us with the solutions. And based on that trust, they will come to us, and we will ultimately be successful, right? But that means we've all got to invest in what's going on behind the scenes. Because that's the point about it's your money. That instantaneousness of payment, I want to see my cash, I can't afford anything to go wrong, that's where the infrastructure really needs to work. Yeah? So as we move away from what has been effectively, good old-fashioned data centers and big machines in rooms and into the cloud, how are organizations and capabilities going to be able to deal with that and scale? The other thing, which is just picking up on your other point, is around competition, but also cooperation and partnership. Right?
That's the next one. So we know that we've got the people, we've talked about the processes, we've talked about the technology, and we've talked about regulation. But how do we get this all working together? It's all about this co-opetition, it's all about collaboration. So prediction number 5 is co-opetition and collaboration, a new form of partnerships. So do you want to take that one, and then we'll go on to Rob, because both of you are doing some great things in your companies.
So the challenge for us is, well, the challenge for all of us is the opportunity is huge.
I'll come in.
Can you eat the elephant alone, right? And the question then is hold on, is there a better way of executing? You can take the decision to do it on your own, or you can take the decision to partner, but can you find the right partners? Yeah? And the thing everybody's got to be really thinking about is, how can I manage my partnerships in order to get to a better outcome faster, right? Because there is an opportunity there, but I want to execute quickly, right? And that traditional thing of, right, I'll go to my finance guy and then we'll try and build it ourselves and we'll spend 18 months doing it, or can I find a way of working differently where I can partner with someone to deliver better customer outcomes and a better solution? But also, I may actually compete with them in a different market segment, right? So how do you manage that flexibly? Right? How do we get our heads around a space that says, actually, I can work with you here in this segment, but I will compete with you in that segment? And that's where we're going to have to become more nimble, more agile.
Yeah.
Can I just also...
Actually, so everybody wants to answer this one, so we've got an extra 5 minutes, audience. So if we go down the line, Rob, Tom, Jessica.
Well, sure. I'll just, to piggyback on Cecil's comments, we're a big believer in partnerships, mainly because it's hard to be an expert in everything, especially with the sophistication and the talent required today. And so at Akata, we focus on identity verification signals around this PII elements, and we're very GDPR compliant. We focus on that. But we are not a platform that makes decisions. We partner with, we're a MasterCard company, but we're very close partners with CyberSource, which is owned by Visa. We're very close partners with Certify, another platform that's owned by American Express. And when we were acquired, we made sure, both with our new parent company, but also we went out to our partners and said, our partnerships will not be disrupted by the fact that we're now owned by MasterCard. And MasterCard's a believer in that, and MasterCard builds a huge network with issuers and merchants and acquirers, and so it's very much a believer in an open loop system like we are further down the chain in identity verification. But the key is we are extraordinarily good, I believe best in the world, at PII around, on a global basis, around analyzing addresses and mobile phone numbers and emails and IPs. And so we can do that as long as we're also not trying to innovate in platforms. And so Experian CrossCore, another great partner of ours, Nice Actimize and Provenir and so forth, and financial services. All of those companies have integrated our API so that many of the FIs out there don't need to integrate our APIs. They already work with one of those partners. So that's, I think, a place where in many parts of payments, there are specialty areas and folks that can focus and be very good, but then there needs to be this, what Gartner would call layered approach and identity of combining different things from a partner standpoint.
Yeah.
Thank you for that. We actually haven't got an extra 5 minutes, so you'll have to speak quickly. So Tom.
I will speak very quickly. I was just going to come back on the point around identity, and it's linked to what you were saying there as well, which is, I think as we develop these new messaging frameworks, and as things like open banking become mature, things can work a bit differently to the way they did before, right? So with open banking, we have access to account information data, we have access to payment initiation. Combining those two things allows you to do things like KYC at the same time as payment.
Yeah.
You couldn't do that before, right? And so now if you're loading up an account, you can retrieve from the bank the account holder name and the sort code and the IBAN and things like that. And actually in some markets like Germany, that's sufficient. You're relying on the bank's KYC to say that you've done your KYC on that transaction. So that's, again, it's massively streamlining things. It doesn't require the consumer to go through a separate KYC process. So I think as we move forward and we kind of get these new standards, there's a lot of additional benefit that's going to unlock. And I talked quickly, and Jennifer, straight back over to you.
Yes, just to finish it off, actually, it was really just a couple of examples to bring this whole partnership and competition versus partners to life, because I do think it's a very complex landscape, as you've been saying. So particularly in the open banking space, because we're all just learning how to do it. And so we were first to market. We just launched, actually with one of the previous speakers, TrueLayer, in the live environment, the variable recurring payments earlier this year. And that was because of a partnership with a fintech. Another first that we did is Pay It, which is an alternative to cards over open banking and faster payment rails. It's easy, frictionless for the customer and cheaper for the merchant. But again, we are very close partners with the card schemes, but this is actually an alternative to cards. So I see it as, rather than competitors and partners, it's actually growing the pie. And I think payments, there's such a huge opportunity, particularly in areas such as open banking, and I know we haven't come on to digital money, which is a whole other work stream, that actually we can all grow the pie, and there's huge opportunity to deliver for the customer.
Yeah, 100%.
Thank you. And look at that, 31 seconds left. So just enough time for me to say it's so good to see you all. And thank you very much for my esteemed panel.
Thank you very much. And of course, thank you, Angela, for hosting.